market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, the U.S. and Iran continue to trade threats with the conflict now in its fourth week. Under pressure to bring down surging oil prices, President Trump issued Iran with a two-day ultimatum to reopen the Strait of Hormuz, which ends at 7:45 p.m. New York time today. So let's get more from Bloomberg's Abir Abu Omar. Hi, Abir.
Good morning, Francine. So the clock is now actually ticking down on President Trump's 48-hour deadline for Iran to reopen the Strait of Hormuz or have its power plants bombed. Iran has countered that if its power facilities are attacked or if it would close the Strait of Hormuz completely. Now, in a Truth Social post, President Trump said that Iran must, quote, fully open without threat the waterway. Meanwhile, Treasury Secretary Scott Bessent said U.S.-Israeli attacks on Iran are aimed at destroying its fortifications along the Strait of Hormuz. Now, the strait, of course, which carries a fifth of the world's oil and LNG supplies normally, has been effectively shut, as we've been saying, since the U.S. and Israel began attacking Iran late February. Now, this has pushed Brent prices up by more than 50% since then. Iran's strikes in the region have been continuing across the Arab Gulf, but also in Israel. The U.S. has also ramped up pressure and deployed additional troops and suggested that it may strike the oil-exporting Kharg Island. The Iranian military also said that it will target energy, IT, and desalination infrastructure that is linked to U.S. and Israel across the wider region, with a senior Iranian official adding that the headquarters and assets of financial entities that buy U.S. Treasury bonds are, quote, legitimate targets. The escalation in this rhetoric, Francine, by both the U.S. and Iran has driven a global market sell-off. We've seen this morning with Europe's Stoxx 600 set to enter into correction territory and gold that is now slipping to around $4,200 an ounce. Francine, back to you.
Okay, Abir, thanks so much. Bloomberg's Abir Abar there with the very latest on what happened at the weekend. Markets definitely risk off today as a sell-off in stocks, gold and bonds deepen. Let's discuss all of this with Seema Shah, Chief Global Strategist at Principal Asset Management, and Paul Wallace, our Middle East and Africa Managing Editor. So thank you both for joining us. Seema, first of all, I mean, the market is oscillating between risk-off, panic, and actually things will be okay. Where are we today?
Well, look, I think once the European close happened on Friday, I think there was hopes that we could have hit the peak worst point, and that over the weekend there may be better news, the markets would have seen some light, and then today would be a better story. Unfortunately, I'm sure anyone looking at the market this morning will have been quite dismayed to see that even after such a significant sell-off on Friday, we've seen that continuing into Monday. Now, it's not as severe as what it was on Friday, at least so far. But the fact that it's continuing just tells you that the market is very concerned about when is this going to end, how far oil prices is going to move, and what's next. I think that's really the key question.
I mean, how do markets find a floor?
So I think we have to get to the peak point where markets fully confronted what the risks are, fully confronting the idea that this is going to be a very prolonged conflict, very likely, and even in terms of once the strait is open, the fact that actually oil and energy, other commodities which are reliant on that, is going to take several months to get back to normal. So I think we did see some last week with central bank expectations moving to hikes, but there's probably a bit more to go.
I mean, Paul, this, I guess, is a concern, is that there was an understanding in the markets that there could be some kind of off-ramp. And when you hear Donald Trump, one time out of two, he says, look, we're nearly the end of the conflict, but it's unclear how this gets de-escalated.
Exactly. And the other time out of two, he's talking about hitting Iran harder or whatever the case is. And that's the situation where we're in right now. On Saturday night, Trump gave Iran a 48-hour deadline to reopen the Strait of Hormuz on his terms completely, as he put it, or face the obliteration of its power plants. If Trump follows through with that threat, that is a major escalation. Iranian officials have come out and pretty much all said that if the U.S. does that, then water and power infrastructure in Israel and in Arab Gulf states are going to be targeted. And we know that Iran can cause significant damage. We've seen this already with strikes on the likes of Ras Laffan, the LNG terminal or production site in Qatar, and energy sites across the region. So it's a real threat, and that would mark escalation if Trump decides to go through with that, because in all honesty, Iran is not going to reopen Hormuz by tonight as Trump wants it.
I mean, what does Iran want?
This is a good thing. We've reported that one of the things it wants is some kind of guarantee or pledge from the U.S. and Israel that they won't attack the country again in the event of a ceasefire or this current war ending. It also wants reparations. I mean, these things are pretty much non-starters as far as the U.S. and Israel are concerned. It's going to be, they're not going to give reparations to Iran. They may be able to unfreeze some assets and allow Iran to classify that as reparations, but it's very difficult to see Trump and or Benjamin Netanyahu saying to Iran, we are not going to attack you in the future, or give any kind of pledge that strikes in the future on Iran are off the table.
Seema, I mean, we also heard from the IEA that more than 40 energy assets across the Middle East have been damaged since the conflict. I mean, is there, again, can oil go to 200? It's unclear at the moment. There's a lot of stockpiles that are being released, but then we don't fully understand the scale of the damage that's been done to a lot of this infrastructure.
Right, and I remember, just a few days after the conflict started, we did see a couple of estimates suggesting that $150 to $200 a barrel would be possible if you get a multi-quarter stoppage of the Strait. Certainly, that is, we are moving close to that point. But again, at the same time, Brent has, it hasn't had a very significant move up in the last few days. It's been fairly stable in the 110 to 115 or so range. But I think it's really about the vulnerability beyond just what happens to oil. I think that's the next stage is, thinking about fertilizer, thinking about sulfur. What is the impact which goes beyond just the standard energy and oil price effects that we can see?
Paul, I mean, if you're the U.S. right now, what do you need? I mean, you're going to the midterm in 6 months, so you definitely don't need oil at 110, certainly not at 200. So is there not an incentive to really de-escalate and definitely go for a ceasefire?
There certainly is that incentive. And you talk about oil prices, I think even more so for Trump, he'll be looking at gasoline pump prices in the U.S., and we're close to $4 a gallon as a U.S. average. That's a bit of a psychological marker and something that Donald Trump certainly won't want. We're seeing fertilizer prices go up, and we're seeing farmers in places like Iowa complaining about that. So it is a really big problem for Donald Trump. So he has that incentive to de-escalate. The problem is he needs to claim victory, and I think if he stopped right now, that would be difficult. Or a lot of people, his critics in the U.S. especially, would turn around and say, "What was the point of this war? We aren't. Yes, you've degraded Iran's ability to produce ballistic missiles, and you've pretty much destroyed its navy and large parts of its military, but is this really a victory?" So I think he needs to get to that point where he's satisfied that he really can make this look like a win. And obviously he has to reopen Hormuz and make sure that the strait is fully opened to commercial vessels.
I mean, it's also a game of numbers, I guess, because the anti-ballistic missiles cost so much more money than the drones. Do we know or understand the capabilities, and how are the Gulf states reacting to all of this?
Yeah, that's certainly the case. There are huge asymmetries in warfare like this, where the interceptor missiles you're using cost multiples of what the offensive projectiles cost. Iran's ballistic missile firings, let's say, on the Gulf and on Israel have dropped overall since the first few days of the war, although those are still happening, and we've seen ballistic missile attacks, bad ones that injured more than 100 people in Israel over the weekend. But it's these Shah drones, which give or take cost $20,000, that are a big problem at the moment. Iran is probably still able to produce those even during warfare because they're pretty rudimentary. They're difficult to detect. They don't cause as much damage as ballistic missiles, luckily, but they are able to cause fatalities and quite a bit of damage. That's a big worry for the Arab Gulf states and Israel.
And see, I mean, this has led to a massive repricing of what central banks will do, right? So there's almost no cuts on the table at the moment for either central bank, but it does seem that the Bank of England and UK gilts are taking the brunt of this because of the inflation situation.
Yeah, exactly. I mean, if if we're looking across the central banks, we have to think about what are their mandates, and I think that gives us a good idea of which ones are most likely to shift. And then, of course, what is their starting point in terms of inflation for the US being above target for 5 years, but also for we know that the Bank of England has been very concerned about inflation stickiness. Now, the big turnaround, is, of course, is that whereas for the Fed, cuts were expected, most people are expecting just a pause for this year. For the bank, we've shifted from cuts right over to hikes. Of course, that's going to see the brunt. And that's really been at the front end. The next stage is obviously to see what happens at their 10-year point and beyond, if there's going to be any moves on the fiscal side. So there are still, I think, some stages to go through before the market can really say we have fully absorbed what the shock is and we're being a little bit more realistic about what's to come.
I mean, is it almost impossible at this point for them to look through this? Again, it's a supply shock, so it's not evident, how they deal with this.
This is the worst nightmare for central banks in terms of that dilemma. Certainly from our perspective, what we think is going to happen is that there's likely to be hikes across the ECB and the Bank of England. And then you get into 2027, all that demand destruction really starts to play out. And then we could see some cuts coming through. But certainly for 2026, this looks like a really challenging year and a big turnaround from what investors were expecting this year to be. So that I think is a big hit.
Seema, I mean, do you have any concerns also about the consumer? I mean, the U.S. consumer, which we talk about on a daily basis, is really propping up this economy. I mean, with the headlines, with inflation, with gasoline prices, is there a worry that they really take a turn for the worse?
Well, so consumer spending was expected to be a very important part of the growth story for the U.S. this year, and that was going to be helped along by the OBBA fiscal stimulus. Now, with oil prices, gas prices where they are, you do get to a point that it almost cancels out the benefit from the OBBA. But overall, comparing the US over to Europe is a little bit different because we have got that fiscal stimulus in play in the US. But it's worth remembering that in 2008, it's when gasoline prices hit about $4 a barrel. That's what really accelerated recession fears. So certainly there's many numbers that we need to keep an eye on.
Paul, when you look at some of the mediators, so again, European nations have been very reluctant to enter this conflict. I don't know whether they'll have to be drawn in, significantly at some point. But do we know if China's getting involved or at least trying to mediate things and take the temperature down?
To some extent, a lot of countries are trying to mediate, but it seems like it's at a low level at the moment and it's not getting very far. Certainly, China's been talking to Iranian officials. European countries have been talking to Iranian officials too. And the likes of Turkey have, and Gulf Arab states, Oman has. We've reported that Saudi Arabia has. It's not making much headway, though. And all sides, let's say all three sides, Israel, the US and Iran, are sounding very belligerent still. And for all Trump's, as you said, 1 in every 2 times talking of de-escalation, on the whole, it's still very much that this war will continue. That's the message from all sides. There's no backing down from Iran, and there's very little backing down or sense of backing down from the US and Israel at the moment. So all the warring sides seem to think that they can and should continue going for a while, for at least a while longer.
I mean, could it be months or could it be even longer than that?
This is a big question. I mean, for Iran, this is an existential question. They see this war as something that is trying, an attempt by the US and Israel to topple the Islamic Republic. So I suppose you could say that time is on Iran's hands. You could almost say it's a bit like Ukraine when they're facing the invasion from Russia. It's existential. So they will keep going indefinitely. Trump is a big question. This market's chaos is something that, as we've mentioned, hurts him a lot. It hurts him far more than it hurts Netanyahu back in Israel. So Trump could be the key to this. It's, in some senses, it could be the point at which the pain becomes too much for him and his administration, and he says, "Okay, we've got to end this thing and take the off ramp."
Seema, what's the likelihood? Because we talk also a lot about the Asian economies really suffering with this price of oil. What's the likelihood that we could see a global recession because of this?
Well, so when we had been putting together scenarios, our worst case scenarios, you get that multi-quarter stoppage in the Strait. You see oil prices above the $125 a barrel to the top point. We don't really know where it can go to, and that's when you start to think about global recession. Now, through this, the US is still the most contained, the least vulnerable, and Asia is looking like the most vulnerable, China with it being the exception. So there are just, I think from a global picture, the Asia story is probably key to deciding whether or not we are approaching a global very negative situation or not.
Okay, thank you both for joining us. A terrific way to get us started this Monday morning. Seema Shah, Chief Global Strategist at Principal Asset Management, and Paul Wallace, our Middle East and Africa Managing Editor. Coming up, we'll talk to the President of the European Bank for Reconstruction and Development about the impact of the Iranian conflict. That's coming up next, and this is Bloomberg. The chief executive of UBS says energy prices are likely to stay elevated as investors digest the impact of the war in Iran. Well, Sergio Armati was speaking exclusively with Bloomberg at the China Development Forum in Beijing.
This is basically the biggest topic we have been discussing lately. Of course, the good developments of China are somehow on the side for the second. But, when I go back to that, I do believe that China will continue to have a pretty good growth driven by innovation and the desire really to address also the topics of climate through innovations. And so, but in a sense, that kind of growth may be derailed by what's going on right now in Iran. Energy prices are likely to stay high for the foreseeable future, putting some inflation pressure and also some pressure on the delivery chain or on the supply chain, and in that sense the situation is a little bit unstable.
We're into the fourth week of this war with no end in sight, really. There's ultimatums out there. There are surely mitigation plans being put in place by businesses. What do you see as the direct cost to your business and your clients right now? And with no end in sight, how does that translate to mitigation advice?
But we saw clients already diversifying their portfolios early on this year. You saw much more dispersion in the way they were looking at maybe shifting away from more the AI technology to a more diversified portfolio. That was a good move, considering what we see in the last few weeks. At this stage, clients are still, broadly speaking, calm. We don't see any major shift in asset allocation, but of course, this pressure that I mentioned before on the economy will start to weigh into the market.
Well, that was the UBS CEO, Sergio Armati, speaking exclusively with Bloomberg's Stephen Engel. Now, surging energy prices from the Middle East conflict, of course, are threatening to cripple developing economies. In response, the European Bank for Reconstruction and Development says it's in talks with nations across the region and Africa to provide additional support as trade and remittance flows face major disruptions. Well, I'm delighted to be joined now by Odile Renaud-Basso, the president of the EBRD. Thank you so much for joining us, as always.
Thank you.
I mean, when you look at what's happening in the Middle East, how are you monitoring developments, and what kind of impact do you think it will have on countries where you operate?
So, of course, we are monitoring very closely the development. There is a high level of uncertainty, so we need to work on the basis of scenarios and so forth. But we already see quite a significant impact on some countries. And, of course, I mean, the impact is quite different from countries in the very close neighborhood. And I'm thinking, for example, particularly in Lebanon, which is the country now really in the middle of the war, with a huge displacement of population, a huge economic shock. So really a very difficult situation. Countries very close by, I mean, in like Jordan, Egypt, West Bank, for example, are also very directly, impacted by the cost of energy, but also the possible impact on tourism, remittances. These are countries which are very highly dependent on Gulf remittances from the Gulf, and so they may be directly impacted by this channel of contagion. But also, more broadly, all countries dependent on oil and gas will suffer from the impact of the increase of prices. Our assessment is that if oil prices remain above or at $100 barrel for a long period, extended period of time, this has an impact on inflation of plus 1% and a reduction of growth of minus 0.4%. And this is what we expect on average on our countries of operation.
Odile, I mean, how do you see, again, what's the way forward for Lebanon? I mean, it's heartbreaking, really, what's happening with the displacement of the population. This is, again, a country that was really slammed economically for things that have happened in the past. How do you see that, can we talk about reconstruction yet?
It's very early. I think what we are trying to do is to continue to support private sector businesses which have, because people need to, for example, we still have some projects on the country for small businesses, private sector and so forth, but it's very challenging. And of course, this needs a political situation and, a political solution with, because it's, part of the country now is really under heavy bombing, pressure, military pressure and so forth. So it's really challenging and there is a huge need for humanitarian support.
So what kind of support or actually, discussions are you having with your partners on the ground?
So what we are thinking about how we can support our clients in the most affected countries, providing emergency support, liquidity support, working capital, sometimes where our clients need some restructuring, this could be considered also. So really working on a toolbox that can help addressing the situation from private sector businesses and possibly also state-owned enterprise in the countries affected. And it's, country directly impacted, but also a country like Moldova, for example, which is far away from the conflict, but it's very dependent on oil and gas from outside, will be impacted by the increase of prices.
So what have you learned? I know you've been very involved also in the war in Ukraine. What have you learned from, COVID and the war in Ukraine that could help some of your clients, if not weather the storm, better prepared? Because we also there's a huge amount of debt. And so a lot of the governments across the board just don't have the money to maybe be able to support the population like they have in the past.
Yes, exactly. So I think what is important is to react quickly, to use, a multilateral development bank like us can play a counter-cyclical role. So we are there for the long term. We are not going to withdraw and we are going to continue to provide support. And for government, when you're talking about how to support and to weather the impact of this energy price shock, you need to have very targeted measures because a lot of governments do not have a lot of margin of maneuver, and you need to find and to reflect about targeted measures so as to limit the impact as much as possible, the impact of the shock.
If energy prices, persist at these levels or go even higher, is there a figure or a timeline where we should really do the alarm bells? Like if the price of oil goes to 150 or 160, or the price of fuel and gasoline? That would have a huge,
that would be, I think, beyond the alarm bells. As I was saying, with the price staying at $100 a barrel, the impact on the growth is quite significant. Yeah. So if it goes much beyond, this would have, and the issue is an issue of price, but also a shortage of energy. So you see a situation in Asia where already there is some restriction on the use of oil and gas in order to limit shortages, the risk of shortages.
And we're also talking about fertilizer. There are second-round effects that maybe we'll find out in the next couple of weeks and months of how deep the crisis could be.
Yes, the impact on fertilizers is already quite significant because 35% of fertilizer, product for fertilizers production were coming through the Strait of Hormuz, and this has a huge impact. And countries like Kenya, for example, depend 30% of their fertilizers coming from Gulf production. So the impact can go quite quickly, having in mind also that we are in spring. It's a season for agriculture where you need fertilizers, so this may have an impact also, accentuated by this fact.
Odile Renaud-Basso, thank you so much for joining us. That is, of course, the president of the European Bank for Reconstruction and Development. Coming up, Iran doubles down in the face of threats from President Trump, so we'll discuss how the Iranian people are reacting as well. That's next, and this is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. The global sell-off deepens. Stocks, bonds, and gold all falling as the U.S. and Iran step up their rhetoric. President Trump threatens to attack Iran's power plants unless the Strait of Hormuz is reopened by tonight. Iran doubles down with fresh strikes across the Persian Gulf. Plus, Italy's Poste makes a €10 billion bid to delist Telecom Italia, turning from its biggest shareholder into its owner. So the U.S. and Iran are trading threats as the conflict enters its fourth week, showing no signs of de-escalating. Now, the U.S. Treasury Secretary told NBC that the U.S. is trying to destroy Iran's fortifications along the Strait of Hormuz.
Every day, we are taking out their missiles, their missile systems, and the factories that build those missiles. And now the General Kane, Secretary Hegseth are leading a campaign to destroy all the fortifications along the Straits of Hormuz. Again, they're not mutually exclusive. Sometimes you have to escalate to de-escalate, Chris.
Well, with us now is Roxane Farmanfarmaian, a lecturer at the University of Cambridge. Thank you so much for joining us. Professor, so first of all, I mean, where are we in this war? It seems that, I don't know whether, the U.S. thought this was going to end much quicker, and to me it's unclear what the U.S. are trying to do now.
Well, I think there are several problems with bringing this war to an end. One is, I think it's very clear that Israel and the U.S. have different goals, and that is one of the issues I think we're seeing over and over again. The U.S. is looking for an off-ramp. They're anxious to declare victory, I think, and de-escalate. And that is not what Israel wants. Israel wants to destroy as much as possible in Iran and reduce its power so that it's no longer a threat to the plans of Prime Minister Netanyahu.
But, Professor, I mean, listening to Donald Trump speak, it seems that, I don't know whether he changes his mind, but it's 1 hour we want to de-escalate, and 2, you will incur the wrath of the U.S. if this continues. So is there really de-escalation progress, or at least, diplomatic talks to try and bring it down?
Well, I think it's one of those situations which we've seen over and over again. The United States goes into the Middle East and then it can't seem to find a way to withdraw. And it's something that makes certainly President Trump extremely angry that he cannot seem to locate that sweet spot in order to leave. So, no, there are no negotiations going on. And as far as I understand, there are demands that are being put forth by Iran at this point, saying various things, that war has to be off the table, that all of the American bases have to be withdrawn. There are very specific elements that are saying no ceasefire. The end of the war is what we're asking for, and I don't see that happening very quickly.
How likely is it that we see regime change in Iran?
I think very unlikely, at least for the moment. The government is very, very strong. It is multi-layered, and it has made contingency plans so that if its top people get taken away, it has others in line to take their places. And I think we can say that regime change would be possible if the pressure on the outside reduced and the Iranian people themselves could get an economic situation that they could start flourishing in, and that would lead to them then saying, we really don't like this government very much, we're going to change it. But as long as there are enormous sanctions on the country, which pressures every level of the population, there simply isn't going to be regime change.
Yeah, I mean, there's also, a huge problem with who has the weapons, because we saw big protests and uprising at the beginning of the year, and they were quashed without impunity from the government.
Yes, I think that is, this is a brutal regime. I mean, it is certainly willing to impose enormous cost on the population. And we've seen this not just in this most recent protest. The Green Movement was an extremely good example of that back in 2008. So I think that part is definitely in the hands of the government. On the other hand, I think certainly it has weakened in this process. And I think the feeling of the population itself is more and more that they've got to rid themselves of this economic malaise, more than even the structure of the government. I think their view is more, we do not want to have civil war, we do not want to have chaos, we want to improve our economic situation, and that will lead to political improvement.
But, Professor, I mean, if this is a fight for survival for the Iranian regime, how are the Gulf states also thinking of this? They have their economies squashed so far because of the drones. Can they live with a kind of, diplomatic agreement?
Well, this next part of, we're all waiting for what happens this evening. And if Trump does go ahead and attack the electrical grid in Iran, it has said it will attack the electrical and water desalination grid in the Gulf. That would be a whole game changer. These are deserts. They're places that people completely depend on electricity and water that is not there. So that would actually change the whole profile of the Gulf. I think they're very worried about that. I imagine the pressure they're putting on Washington at this point is high. But I think it's one of those things that he feels, I think, that he cannot let Iran have an upper hand in this. And so we see this tit for tat, and it goes on.
I mean, Oman played a very important role, and now a little bit less because they didn't really get anywhere. Could China play a bigger role to mediate, or at least, again, just try and take the temperature down?
Well, I think that's a really good point, and also Russia. I think both of them are gaining quite a bit from this war, particularly Russia, as it's able to amass enormous amounts of income with its oil now off the sanctions list. And I think both have weight they can push with Trump and are considered honest brokers with Iran. So I would say this is going to have to become a much different kind of negotiation and moderation, if you will.
Why do you think the U.S. entered this war?
I don't know. In many ways, I don't even think of it as America's war. I think of it as Israel's war. And I think that the deal that was on the table during the negotiations, this last negotiations in Geneva, was actually a fantastic deal, better than Obama had received with the nuclear deal of 2015, the JCPOA, and really would have possibly delivered Trump the prize he's always wanted, the Nobel. But I think there was an element of wanting to work with Netanyahu on this, and Netanyahu has been pushing this war. And so I think, unfortunately, there was I would describe it as a real misstep going in.
Yeah. I mean, there is, some people, there's a line of thought that's saying, look, with gasoline prices hit $5, that's when the U.S. says, look, we've done our job, let's get out. I mean, is that a possibility, and would that really make a difference?
I think not only the gasoline price, I think the drop in the stock market. I think we're seeing gilts going through the roof. I mean, I think there's several elements that really are close to Trump's heart and that he watches very carefully. And one of those is going to, I think, finally tip the balance. He cannot possibly imagine resuscitating his party for the midterms if the economic situation is like this. And it's going to have knock-on effects with the food and fertilizer, as you were speaking about.
Thank you so much for joining us,
My
Roxane
pleasure.
Farmanfarmaian, the lecturer at University of Cambridge. Now, the head of the International Energy Agency has also described the energy market disruption as equivalent to two major oil crises of the 1970s and 2022 gas crisis all put together. Joining us now is Will Kennedy, Bloomberg's EMEA news director. So, Will, thank you for joining us. What happens now in the oil market?
Well, a lot will depend on what happens when this self-imposed deadline from President Trump passes at the end of our day today. I think it's fair to say that the eyes of oil traders will be firmly on what happens next. And I'm not sure there's a good oil market scenario in either case. If Trump decides to follow through on his threat and strike at energy targets inside Iran, we've heard from your previous guests that Iran is likely to retaliate against energy infrastructure across the Gulf. It's done that already, but it's threatened to step up those attacks, and that will be very bullish for the oil price. Even if he doesn't, there's no indication that Iran is going to concede to his demands and open up the Strait of Hormuz. And as we've discussed several times, Francine, the longer the strait stays closed, the more bullish it is for oil, the more stress we put on the energy system globally, and the more we'll see energy prices, not just in oil, but in oil products, continue to rise.
Well, how high could oil go as the disruption looks set to continue?
Well, I'm not going to give you a forecast, but we've seen some pretty hair-raising figures out there. I think that there was a story that said that Saudi Aramco, the big Saudi Arabian oil monopoly, had done its analysis and said that it was worried that oil could go as high as $180 a barrel. We've definitely seen those sort of figures in the 150 to 200 range bandied about, and while those are extreme figures, higher than crude has ever been, I think a lot of people in the market would say that if this continues for any length of time and strikes on energy infrastructure continue, that's inside the realms of possibility.
Well, what about gas?
Well, obviously, this is the other big story from the war so far. Last week, we saw the world's biggest LNG plant in Qatar hit by missiles from Iran. There was a pledge to step back from those kind of attacks, but that seems to be back on the table after the president's statement over the weekend. If we see any more attacks on Ras Laffan, on other gas infrastructure in the region, we could continue to see those prices go higher. And the important thing there is the length of time it takes to rebuild that gas infrastructure means the impacts will last months, years, and there's no quick unwind for this situation.
Well, thanks so much, Will Kennedy, there, Bloomberg's EMEA News Director. Now, Italy's Poste has said, of course, it will launch something. Well, Italy's, let me get this right, because it's one of the biggest stories that we're doing today. Poste is bidding 10.8 billion euros for full control of Telecom Italia. We'll have a full roundup of that. Of course, the move would fold Telecom Italia's operation into Poste's retail network, creating possibly this combined entity with about 26.9 billion euros in annual revenue. So we'll have plenty more of that after the break. Also coming up, New York's LaGuardia airport has closed to incoming flights after a fatal crash on the runway. We'll also have details on that next. And this is Bloomberg. Conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, Italy's Poste has said it will launch a voluntary public offer worth 10.8 billion euros for the former Italian phone monopoly, Telecom Italia. Well, joining us for more on this is Daniele Lepido, Bloomberg's senior reporter. Daniele, thank you for joining us. So what does Poste Italiana's bid mean for the future control of Telecom Italia?
Yeah, good morning from Milan. Yeah, it's another day with Telecom Italia, and this saga is never over. Yes, basically it's a kind of full back to the state control of one of Italy's largest company, and the Meloni government is tightening its grip on Telecom Italia. I would like to remember that the Poste was already the company's largest shareholder, and now with this takeover means that Telecom Italia will become the digital pillar of Poste Italiene, which is one of the country's largest conglomerates.
So why is the government backing this kind of consolidation now?
Yeah, basically they need to have a big platform, a big digital platform to compete with other European and US players, and especially with the merging of nationalism, having, Telecom Italia fully integrated in Poste Italiane could be a big, something pretty important, very important for the company, or in order also to offer more services for EI, for for example, and other digital services for enterprises, not just for consumer. Don't think just about consumers and customers, but also for enterprises and data centers, for example.
But Daniele, what changes for consumers and competition in Italy's telecom market?
Yeah, let me say that this move by Poste Italiene could in some way kick off a new wave of mergers because you know that Italy's telecommunication industry is one of the world's most competitive, and so that means that and other mergers could happen. We have 4 carriers in Italy, 4 big carriers, and the aim of the industry is having just 3.
Daniele, thank you so much. Bloomberg's Daniele Lepido. Now, German conservatives, led by the Chancellor, Friedrich Merz, have secured an election win in a socialist haven as he struggles to gain traction amongst voters nationwide. Meanwhile, in France, the far right fell short of taking control of some major cities during yesterday's municipal election. So let's bring in Oliver Crook, Bloomberg's chief Europe correspondent, to take us through some of the results. Ollie, good morning. So first in Germany, the victory seemed to soften the blow for the CDU after a stinging defeat in a neighboring state.
Yeah, I think that rather than sort of saying this is a massive victory for Friedrich Merz, the way you've put it is quite accurate. It's softened the blow of some of the defeats that he has suffered since he became chancellor about 10 months ago. And we should say this is a candidate, this is a chancellor that is very unpopular, relatively speaking, in Germany. He didn't even get all the votes of his lawmakers in his own coalition on his first day when he was supposed to be appointed chancellor. And that has sort of been the kind of flavor going throughout his premiership. So 2 weeks ago in Baden-Württemberg, that was a much more significant election because it's a much bigger territory. The CDU managed to lose by a couple of points to the Greens, but now we see a little bit of redemption here for Friedrich Merz in Rhineland-Pfalz, where he managed to edge out the Social Democrats that held the seat for 35 years. We should also say, because we watch this with very close interest, Francine, at every state election, the AfD did manage about 20% of the vote, which is notable despite the fact that they came in third, because this is not really, generally speaking, a haven for them that is a stronghold for the AfD. So again, significant in sort of appraising the state elections. There are 5 of these this year in Germany, and really the ones we're going to be focusing on is a little bit later in the year, Francine, particularly in Sachsen-Anhalt, when we'll expect an election there where the AfD may not only win, but may get an outright majority, and that would be yet another blow to the Chancellor of Germany.
Ollie, Marine Le Pen's national rally also missed out on some of their biggest targets. So what does this mean ahead of next year's presidential election?
Yeah, so just getting to the sort of the cities that we care most about, obviously Paris is the sort of crown jewel within France, and that was held by the socialist Emmanuel Grégoire, managed to win that seat, really taking another sort of term for socialists after 2 terms from Anne Hidalgo. So that was sort of the main sort of municipal election that we were watching out of 35 or so thousand that there were across France. But I think the trend across France, what we did see was a rise for the far right, for the Rassemblement National, Marine Le Pen's party, headed now by Jordan Bardella. We did see their popularity increase, but in the second round vote, we did not see them get all the way to the goalpost on many of the key elections in the key cities within France. So it's a bit of the theme we've seen historically within France, where you do see a move to the right, you do see some rising popularity of the RN, and at the same time not really getting that escape velocity in all of these jurisdictions. That being said, they did win a number of different cities, and it will give them an opportunity, which they have not had since, you know, the 1970s when this party was founded, to begin governing and get that track record sort of on display ahead of the 2027 election next year, which is really anybody's game, as you know, Francine.
And Ollie, Denmark goes to the polls on Thursday as Prime Minister Mette Frederiksen seeks a 3rd term. What can we expect there?
Yeah, that's right. So they're going to go to the polls tomorrow to vote in the national election within Denmark. She called the snap election in the wake of what we saw with the sort of disagreement over Greenland. This was really sort of a boost for her nationally. Her polls have been dwindling in the last couple of years, but really this would be her 3rd term. So this would be Mette Frederiksen stepping up to the plate to try to get a 3rd term. They have it pretty much on lock. It is very likely that she will win. The question will be what the coalition will be composed of. The main issue domestically has been a reform on taxes, a wealth tax that puts a 0.5% tax on people that have effectively more than $4 million. That has been pretty controversial within the private sector. But from the EU perspective and the national stage, Mette Frederiksen is a sort of known quantity for the Europeans. She's somebody that's been very hawkish, very defending of Ukraine, but also is a sort of a interesting model of a socialist who is, a very strong socialist and at the same time very sort of strong on immigration policy. And that's a sort of playbook we're starting to see develop across Europe. But likely she's going to win another term when they go to the polls. The question will be in what kind of coalition she'll assemble the government.
Ollie, thanks so much. Ollie Crook there with the very latest, of course, on some of these elections that have been or that will be. Just the Danish election is actually tomorrow, not Thursday, so I stand corrected. Now, New York's LaGuardia Airport will remain closed until at least 2 p.m. local time. That's 6 p.m. London. That's after an Air Canada Express plane collided with a vehicle shortly after landing, killing the pilot and co-pilot. Let's get more from Danny Lee, Bloomberg aviation and transport reporter. Danny, thank you for joining us. What more do we know about the incident?
Hey, Fran, good morning. So we know that there was a fire truck that was crossing the runway at LaGuardia Airport late night on Sunday and crashed into a Air Canada regional jet that was landing. And unfortunately, as said, 2 pilots have now died. We don't know any more about the extent of injuries on board. We had 76 passengers on board the aircraft overall. But yeah, this is yet another fatal commercial aviation accident in the US at a time when authorities are trying to modernize and boost safety.
Yeah, and Danny, as you're saying, this is just, it feels like it's just the latest accident hit the US aviation industry in the last 15 months.
Yeah, that's right. I mean, the string of accidents that have taken place, obviously we have to go back to the most notable case, the American Airlines jet that crashed, collided into a US military helicopter back earlier last year, and then also the UPS crash. So clearly there will be a focus on authorities to try and quickly understand what went wrong in this latest incident. We do have National Transportation Safety Board officials being dispatched to the scene. But already when you try to look and understand what has happened, there is some audio on the internet relating to the air traffic controllers being remorseful for what has happened. But it's going to be a key thing to try and get a handle on what has happened, because for now, one of the US's busiest domestic airports will be closed until 2 p.m. That's going to affect many hundreds of flights in the meantime.
Danny, thanks so much. Danny Lee there, Bloomberg's Asia aviation and transport reporter. Now, Bloomberg understands that the chief executive of the world's largest oil-producing company has withdrawn from a major energy conference in Houston as he deals with the situation in the Middle East. The Aramco CEO, Amin Nasser, had been due to appear on stage at CERAWeek, but sources say he will no longer take part. Aramco has had to reroute much of its oil because of the effective closure of the Strait of Hormuz. And European Commission President Ursula von der Leyen is visiting Australia this week after she said a trade deal between the two sides is in the final stretch. Well, von der Leyen will travel to Canberra to meet with Prime Minister Anthony Albanese, although it has been confirmed if a deal will be signed. Well, Australia and the EU have been negotiating over a free trade agreement for more than 8 years. And the Volkswagen CEO has told the German newspaper that the restructuring process at Europe's largest automaker will continue even as its order backlog rises. In an interview with Bild, Oliver Blume has said that to avoid costly overcapacity, the company is applying clear manufacturing cost targets to all of its plants, while Blume adding that Germany can learn a lot from China, hailing the country's systemic approach with so-called 5-year plan. And finally, Lionel Jospin, the former Prime Minister of France, has died, age 88. That's according to the French news agency AFP. Now, during his 5 years in office, which ran from 1997 to 2002, France recorded its fastest economic growth rates in a quarter century, outperforming the UK and Germany. Jospin was also known for introducing a 35-hour work week. While AFP reports that Jospin died on Sunday, it did not immediately provide a cause of death. So, of course, there is quite a lot going on in today's market session. If you look at gold, for example, it's fallen for a 9th day, again, as the war in the Middle East spurred a broad sell-off across markets. Gold actually plunging as much as 8.8% to just shy of $4,100 an ounce. Now, the metal, in fact, has shed more than 20% since the war in Iran began, with part of the losses explaining by a dash of cash for investors ditching their relatively liquid assets. Now, expectations of higher interest rates, but also expectations of a stronger dollar have added to headwinds for gold, with non-yielding bullion looking less appealing when rates remain high. Amongst the other things we're watching, of course, there's also Brent. It was above 110, also WTI in the U.S. Overall, look, it's, fears of this possible escalation in the war in the Middle East are driving sharp declines in bonds and stocks after the U.S. and Iran seem to be toughening their rhetoric. Tomorrow on The Pulse, we'll have an exclusive conversation with the Telecom Italia chief executive following that takeover bid by Poste Italiene. That's at 9:30 a.m. London time. Coming up, Sheryl Sandberg, the former Meta COO, is on Bloomberg ETF IQ at 4 p.m. London time. Up next, it's Bloomberg Surveillance, and this is Bloomberg.